Hey everyone, welcome back to Corporate Decoder, the place where we decode the future. And this time it looks like our friends at MacKenzie Realty Capital are doing a little bit of housekeeping on their stock that might shake things up a bit. Today we're diving into MacKenzie Realty Capital's latest filing, specifically an 8K report. Now, an 8K is like a company's diary, but it only shares the really important stuff that happens between their regular check-ins. And the big news today revolves around a corporate action that took place on August 1st, 2025. This filing is all about something called a reverse stock split. Now, what exactly is a reverse stock split, and why would a company do it? Think of it like this. Imagine you have $10 bills, but you want to make them look a bit more impressive. Instead of having 10 separate dollar bills, you trade them in for one $10 bill. It's the same total value, but now you have fewer, more substantial looking bills. That's essentially what MacKenzie Realty Capital is doing with their common stock. They're consolidating their shares. Specifically, this involves a 1-for-10 reverse stock split. So for every 10 shares of common stock you owned before, you'll now own just one share. Now, this isn't some magic trick to make money appear out of thin air. The total value of your investment should, in theory, stay the same immediately after the split. What changes is the number of shares you hold and the price per share. For example, if a stock was trading at $1 per share and they do a 1-for-10 reverse split, the new price will theoretically jump to $10 per share, but you'll only have 1/10 of the shares you had before. So why would MacKenzie Realty Capital do this? There are a few common reasons. One big one is to increase the stock price. Low stock prices can sometimes make a company look less attractive to investors, or even get them delisted from major stock exchanges like NASDAQ if the price falls below a certain threshold. By increasing the price per share through a reverse split, they can make their stock appear more substantial. Another reason is to reduce the number of outstanding shares. This can sometimes make the earnings per share look better, as the same earnings are divided among fewer shares. It's like dividing a pizza among fewer people. Each person gets a bigger slice. The company is incorporated in Maryland, and this action is being filed with the SEC as of August 1st, 2025, with the split officially becoming effective on August 4th, 2025. Now, a key detail here is how they're handling fractional shares. If after the split you would have ended up with a fraction of a share, you won't actually get that tiny sliver. Instead, MacKenzie Realty Capital will pay you cash for it. The amount you get will be based on the closing price of the stock on the day before the split takes effect. And there's a minor adjustment to the par value of the common stock, decreasing it from $0.101011 per share. This is more of a technical adjustment and doesn't typically have a direct impact on the investor. So while the split is effective August 4th, you'll actually see the trading reflect this change starting August 5th. And to keep things organized, the stock will even get a new CQSE number, which is like a social security number for securities. This split applies to all shares, so it doesn't change how much of the company you own proportionally unless you get cash for fractional shares. Your voting rights remain the same too, unless that fractional share cash payout affects your overall holdings in a minor way. Importantly, the total number of shares the company is allowed to issue, its authorized shares, will not change because of this split. Now, what's really interesting are the ripple effects this reversed stock split has on other types of stock, particularly their preferred stock. For Series A and C preferred stock, the price at which they can be converted into common stock, or the price if the company buys them back, is going up significantly. It's jumping from $10.25 per common share to $10 per preferred share. This essentially means it will be much more expensive for these preferred shareholders to convert their holdings into common stock. Or the price if the company buys them back is going up significantly. It's jumping from $10.20 after Series A and C preferred stock. The price at which they can be converted into common stock, or the price if the company buys them back, is going up significantly. It's jumping from $10.25. The Series B preferred stock has a slightly more complex adjustment. Its conversion price will also increase, but it will be capped. It will be the lower of $102 for either 50/50 or the average trading price of the common stock over the 20 days before conversion. This offers a bit more flexibility. We also see adjustments to dividend considerations for the Series B preferred stock. Essentially, if the company pays out more in common stock dividends, the terms for the Series B preferred might change. The filing indicates that any future common dividends paid after the split will be multiplied by 10 for the purpose of calculating certain obligations related to these preferred shares. This means the company is aiming to make the common stock dividend payouts more significant relative to its preferred stock obligations after the split. But it doesn't stop there. The company's warrants are also getting a makeover. Warrants are like options that give the holder the right to buy stock at a certain price. For their pre-funded warrants, the price to buy the stock just dropped to a tiny ebb dollar to times zero, and the number of shares they can buy is being reduced. This suggests a move towards making the warrants more valuable by increasing their strike price, but reducing the quantity. To spread the word about this reverse stock split, MacKenzie Realty Capital also issued a press release on August 1st. This press release, filed as an exhibit, would contain the company's official announcement and likely some commentary from management about the strategic reasons behind the split. And finally, as is standard practice, the filing includes the actual amendments to the company's charter as exhibits, officially documenting these changes. The report is signed off by Robert Dixon, the president of MacKenzie Realty Capital, confirming the company's official endorsement of these actions. So what's my take on this whole reverse stock split situation for MacKenzie Realty Capital? On one hand, it's a classic move to shore up a stock price that might have been looking a bit anemic. Companies do this to appear more respectable to institutional investors and to avoid the dreaded delisting. It's a way to manage perceptions. However, it doesn't fundamentally change the company's business or its value. It's like rearranging the furniture in a house. It might look different, but the house itself is the same. The real questions to ask are why the stock price got low in the first place. Is the business struggling? Are there underlying issues that a stock split won't fix? The adjustments to preferred stock conversion prices and warrant terms are quite significant. They essentially make it more expensive for preferred holders and warrant holders to convert their securities into common stock. This could be a strategic move to retain more common stock for existing shareholders or the company itself, but it could also signal a potential dilutive event that they are trying to mitigate. Looking ahead, investors will be watching closely. Does this reverse split actually lead to increased investor interest and a higher stable stock price? Or is it just a temporary cosmetic fix? The market will ultimately decide. Keep an eye on how the stock performs after August 5th. Remember, a reverse split alone doesn't guarantee success. It's the underlying business performance that truly matters. Alright, what's your take on this move by MacKenzie Realty Capital? Does a reverse stock split make you more or less confident in a company? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give it a thumbs up and subscribe to Corporate Decoder for more insights into the world of business and finance. And don't forget to join our Discord community linked in the description below to continue the conversation. Thanks for watching, and I'll see you in the next video.